You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com.
And welcome to the Option Block, your bi-weekly source of the best option material on the World Wide Web. My name is Mike Tusaw, and I am the new host for this show. Mark Longo is done. No, just kidding. Mark had to go to his event, the Options Alliance, today in Chicago, and so he is leaving it to us outsiders, us non-Chicago folk, Andrew and myself, to hold down the fort today. And we'll do our best. Andrew, how are things out in the great state of Maine?
The great state of Maine it's actually unseasonably warm, and I saw a guy out there digging for worms in the cove. So normally there'd be about 3 inches of ice to dig through. Not right now. So it's warm and quite lovely. Oh, and I got a couple things to add about Longo. So you notice how the two Chicago guys aren't here?
Yeah.
Just having a party?
Yeah.
And the second thing, do you notice how he called it the Alliance? Kind of like, alluding to Star Wars, where, they're the Options Alliance against,
Ooh.
Who do you think the dark side is? It's kind of hard. There's so many.
I was going to say, you could say it's the Fed. You could say it's the government. I mean, there's a lot of ways you could go with that one.
You could. I just thought I'd throw that in there just because they're not here. I think
That's
that
true.
was really the reason. If they're not going to be here, we will make fun of them.
That is true. That's true. I mean, we could tell mean jokes about them. We could do a lot of things with it.
Well, we could, but I guess, Mark might take umbrage. He might.
Yeah, I probably would. So anyway, without further ado, let's go ahead and dive into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
Andrew, this was an interesting day today. I know from what I was seeing, it looked to me like we had an energy-driven rally, but wait, oil was actually down on the day, but yet energy stocks seemed to be driving the market upward. Market went way up there, and then it kind of came down a little bit at the end. Very unique day today, to say the least. This was one of the more unique ones that I've seen in a long time. What were you guys seeing over there at the pit?
Kind of similar, where there is a lot of, well, let's just call it fence sitting, right? So when you're sitting on the fence, it's easier to fall on the right side or the left side. You can't make a decision going one way or the other. And I'm not going to say that three-letter word because we're going to save that for a special block coming up. But it just, waiting for announcements. The rally couldn't get going. I thought kind of the big event for the week was KMI, which is kind of the big monster. And, they're not an MLP per se anymore, but they are their big daddy, and they cut their dividend a lot. So I think the market, a lot of the oil companies, services, related industries sort of been waiting for that. They're sort of the last one to hold the line, and they cut. And maybe that just clears the decks for, some dividend cuts, shoring up cash positions, getting ready for whatever the next level in oil is going to be, whether it's, 30 or 45. It sure doesn't feel like it's going to go rip into 60 anytime soon, though. So I think just in the uncertainty on the oil thing is, again, that is probably more related to the bond market than the equity market. The equities have already sort of, they've already sold off so much. It's been kind of a dead area for a while. Even after we had that rebound in the spring, it's, almost everything is close to its lows for the year in that space. So I think the KMI, the Kinder Morgan dividend cut was kind of a relief valve for the industry as a whole, I think, even though it's kind of sounds weird to make that on such a massive industry, but just the expectation for equity. So, oil is going to be lower. I think that's stock market is getting used to that fact. That's going to be the new, let's call it certainty. There's really no rally in the foreseeable future, at least for it. And just where that takes us. And I think the big problem is, worrying about high yield bonds and all that kind of stuff. Usually the bond market smacks the equity market around. So if there's some worry about defaults in the bond markets and a lot of these exploration companies, which tend to have some leverage, and then they go start pumping oil and they make money again, that puts worries in there. Funds get worried. They get squeezed a little bit because the bonds they owned are getting squeezed down. And that makes them sell equities because they got to raise some money. So we've seen that time and time again, and it looks like we might see it one more time.
Another thing that's interesting today is that I'm typically not much of a commodity guy, except for the shiny stuff, of course. If it's not shiny, I stay away from it, obviously. But one thing that I'm noticing is natural gas is down again today around the $2 level. And, with the natural gas drop, with the oil drop, and with energy stocks going higher, what'll be interesting to see is the $2 mark in natural gas, if it can hold that, because it's still we had it was a little bit lower back in late October, but besides the drop off in late October, we're at new lows for the year on natural gas. So a lot of strange things happening with the commodity themselves going lower, the stocks going higher, with the dividend being cut on KMI, and there's a lot of things happening right now. Would you agree this is rather unique in terms of the moving parts, kind of moving in kind of odd directions?
They are moving in odd directions. Maybe it's because we're kind of getting close to a bottom. Who knows? But you could go broke finding bottoms. But it is a little. I think that the activity is a little odd. I think the liquidity is starting to dry up as we get to Wednesday, and it's just making people nervous. That's why we saw that kind of seesaw and volatility today. I mean, VIX was up, VIX was down, VIX was up, VIX was down. There's just no real liquidity for that kind of trading. So it's we spent a lot of the day with the market up and VIX up, and the volatility futures up. So normally, no rally holds for any period of time when we have that. So, and we kind of closed on a more normal note. You had a little rally in the broad market, little sell off in volatility, but not much. And I don't think they're going to sell it off until Tuesday or Wednesday. We'll see how certain they are about what the Fed's going to do.
Yeah, it'll be interesting to say the least. You won't be bored for the next week, folks. That's pretty much that is one bit of certainty that I can say is this will not be boring.
Yes, this odd block next Thursday, it will be interesting to see where actually we sit after all that.
It will for sure. So, without further ado, that concludes the trading block for today. Let's move right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
and welcome to the Odd Block, folks. This is where we look at stocks and options, and we're just looking for unusual activity. If something looks a little bit odd, something that scratches your head, we like to look at it. We like to analyze it. And as Mark likes to say, the big money isn't always necessarily the smart money. So, Andrew, what do you have on your docket for us in the first stock in the Odd Block?
In the Odd Block, well, I'll just tell you, this would be a trade near and dear to your heart. Somebody was buying calls in GLD. Imagine
no
that.
way.
Yep. Actually buying calls in GLD. Buying a lot of them. Okay. Buying, let's just say a copious amount of them.
How copious?
To the tune of around 16,000 contracts.
Wow.
The Dees quarterly 105 calls.
That's a bullish bet.
I thought so. For 67 cents. So that's not just a small amount of premium. That's real money. And average daily volume is around 100,000 contracts. So, this is a pretty good chunk of that volume in one block. There's almost no open interest on the strike, so the trade was all opening. It had all the look to me. It had all the look of somebody buying sort of just those near the money out, just those near out of the money calls and selling stock. But when I went to look for the stock transaction, I couldn't see anything. And what it made me bring, I don't know if you remember. You remember when Men's Warehouse fell out of bed a month ago or so? There was the trader that bought all those out of the money calls and sold stock against them, or just those near the money calls.
Yeah.
It felt like the same type of thing where, after the Fed, maybe the Fed does something, and maybe gold has an adverse move. It has the smell of a trade that somebody wants a lot of leverage. However, I did not see a block of stock go up. So either they have a short stock position and they want to be able to keep it and hedge, or they just want to get crazy long. That's a pretty bold move to buy all those calls, because you would need a pretty solid move in gold to make that work. But maybe they know something I don't know.
Well, a couple things that makes me think of that. I don't know if you would need a pretty solid move on gold, but I don't think it's out of the question based on the time frame. With what's going on next week, with which we refuse to talk about until the special block, the three-letter word, I think that someone is making some type of a bullish bet on that. Now, the other thing with which it could be, and I don't trade futures options on gold. Not to say that I never have or they're a bad product, but typically for me and my clients, GLD is just a better fit. I'm sure they have end of quarter options on gold futures. I'd be shocked if they don't, do they?
I've never traded them, so I don't know. I don't have an answer for you, because I know gold has all those crazy expirations. So I'm not sure. I've never traded a gold future option.
Got it. So, it could be something along those lines, and then maybe it didn't have the same expiration date that they're looking for, but I'm willing to bet they'd have end of quarter gold options. But even if they don't, the thing that it also could be is perhaps someone has a big short position on the gold futures. One thing that I like to do with clients at times is, let's say that we have money that's in an IRA, and one way that you can move money from an IRA to a non-IRA, or from a Roth to a non-Roth, let's say that you have a lot of money in your non-qualified account, and then you buy a bunch of long futures. Now, I've never done this exactly, but it's kind of happened by accident a few times, but I've never done this on purpose. But let's say you buy a bunch of long futures, and then in your IRA, you buy a bunch of puts. And let's say that the underlying just goes way, 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 way down. And you cash in on those puts in the IRA, and the market goes way up. And let's say that you lose a lot of money on those long futures outside the IRA. Well, you can make the deduction outside the IRA, and granted, it's only $3,000 a year, so take this with a grain of salt. That's the most that you can actually claim as the capital loss carryovers. But what you've essentially done is you've taken money from outside of an IRA and put it into the IRA just by doing that. And that's kind of another way with which that can be done. So with that being said, let's say you don't qualify for a Roth IRA, and maybe you have a small Roth IRA from a few years ago. That's one way to do it. Now, like I said, I've never done that on purpose, but it's a way with which it could kind of happen by accident. And maybe this guy is in some type of a position like that, to where in his non-qualified account, maybe he has a bunch of short futures positions, and maybe he wants to hedge it within his IRA. Not sure, but just a theory.
Well, that's an excellent theory, by the way. Excellent theory. I could see how somebody would want to do that. So I can't rule that out. It cannot be ruled out, that theory.
Bit of a long shot, but hey, I don't get to go on the odd block too often, so I want to put in my 2 cents. By gosh.
Well, if you're going to come into the odd block, you might as well be odd. That's what we like to say.
And that theory of mine, I will admit, is odd.
A lot of work
Yes.
to talk to the tax man.
Yes.
All right. The next is in Whole Foods markets, ticker symbol WFM. We had a veritable flurry of call buyers. Again, the timing on some of this, so Whole Foods on the tape, there was some takeover speculation, rumors, blah, 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 right? So what do people always come for? They come for the weekly 31 and 31 and a half calls. So the trade we posted today was the DC11 weekly 31 calls for 50 cents. They closed 42.49. 4,000 of them traded, and 7,000 of the 31 and a halfs traded up to about 25 or 30 cents. They expire tomorrow. And they're out of the money. Okay. I mean, the 31s are slightly in the money, granted, and the 31 and a halfs are a little out of the money, but you're buying those calls and you must be expecting something fantastic to happen. So it was a lot of smaller paper, buying them up, and okay, I don't know what's going to happen tomorrow, but you don't have a lot of room to be wrong with that particular trade. Of course, if Whole Foods gets taken over tomorrow at $40, they'll all be laughing at us. But buying, buying out of the money calls with the day to go. I don't know, Mike. What do you think about that as a strategy for longevity and happiness?
You only got to get it right once. So if you get it right once, hey, then you're set. But the other 99,000 times, if you can handle it, then God bless you.
So anyway, that was the Whole Foods market. I like to highlight that takeover spec when we have the chance. And last but not least, that old favorite of ours, Men's Warehouse. Boy, I'll tell you what, they should have never fired that guy, that Zimmer guy. Because after where that stock was trading this week? Or I'm sorry, not this week, but this year? It was a $60 stock, Men's Warehouse.
Really?
Yeah. And today it's $15.27.
Wow.
It just totally annihilated, right? And I don't know, there's board shakeups, and I keep looking to see if there was a corporate action. It just looks like it's down about 75%. I guess that's all I can say. So I guess they had their sales strategy or something, but it just has been punished. It's down another $3.30 today. I think it's trading below. If you go to a service, it's now trading $6 below the book value in the most recent quarter. Whatever credence you give to book value, but absolutely and totally annihilated as a stock.
They're not going to love how they look.
They do not. Now, it is probably one of the cheaper stocks around, I think, at this point. I mean, they had that bad quarter in March. I know they had to take some lot of write-downs and whatnot. Gosh, is it a cheap stock? Doesn't mean it can't get cheaper, but And this is, I guess, somebody was kind of agreeing with the sentiment. It normally trades around 2,900 contracts a day. This strike alone, the January 14 calls, this customer paid $1.20 for them 400 times. By the end of the day, those calls were trading for $2. 6,000 total traded. Volatility went even after earnings. I think this just makes such an obvious buy right to me, but maybe I'm crazy. You just sell the 14 calls over stock. You can even sell the 13s. The yields looks pretty good. But just crushing the heck out of this name today. They didn't like the earnings at all. They didn't like the guidance. They didn't like anything. But the volatility has remained in the options. Normally you see a pretty good vol crush, but you still got 75% volatility in January. So somebody went in, paid $1.20 for the Jan 14 calls, and they're already up 80 cents. Who knew? And I know that the name was actually lower. It was trading in the low 14s earlier this morning, right after the news came out, and it spent most of the day fighting its way back. But this is just one. I just think the stock got way oversold, and it's one of those franchise businesses that's been around a long time. I don't think it's going to zero. It just looks like a value play. I don't know if it's a value trap, but somebody thought there was some value in it and bought the bejesus out of the Jan 14s. Just tons and tons and tons of them. I'm also seeing covering on the Jan 19 calls. I saw a lot of call covering all up and down the line in this particular stock. So it's just a very, very cheap stock, and buyers of which now look like calls that are $1.20 in the money. So they just traded at all prices today. But anyway, I don't know if you have any thoughts on Men's Warehouse, but we highlighted it before. Once it usually gets on my radar screen when it was an earlier odd blocker, it tends not to leave my radar screen.
It's like the mafia. Once you're in it, you're there for life.
Something like that, yes.
There you go.
I was about to say, even had Uncle Louie.
We will not go there. All right. Well, ladies and gentlemen, that concludes the odd block for today. And now we're going to come into the Fed block. And welcome to the Fed block, everybody. The Fed block is the latest and greatest block to our show on the option block. We have some interesting information, but let's face it, that is the big news coming up on this coming Wednesday. We want to talk about a lot of different things going into it so that you can feel well prepared as you go into arguably the biggest announcement in probably the last 7 or 8 years, I would say. Wouldn't you agree?
Yeah, it's certainly the biggest announcement until the end of the year, I think.
Yeah, you'd hope.
Except if some politician comes up with some other corker or something. But other than that, I'm pretty sure this should be the big economic announcement for 2015. What I found very interesting for all those people who like to look at charts, look at the chart of December 2013. This was one of my clients brought this to my attention. I would love to take credit for it, but I can't. But around December 2013, when Bernanke kind of surprised and said, we're going to start tapering our bond purchases, and we're done doing that. Now, just take a guess, Mike Tusaw, what the S&P 500 did in the last 2 weeks of 2013.
Well, 2013 was a year that the S&P was up, around 30% over the course of the entire year.
Yep.
I will say that it went down a little bit.
In the last 2 weeks of the year in 2013, the SPX was up 75 handles about.
Well, I figured you were trying to trick me on it, so that's why I guessed that way. So I'm claiming umbrage on your psychological warfare. Next time I'm going to cheat and look at my chart.
So I thought that was, we had a Fed announcement, and they said, okay, no, we are going to stop buying bonds, and the market rallied big because the market likes certainty. And I think if Yellen and company actually do their rate raise for whatever it is, that will make everybody much more comfortable about the future, price of oil notwithstanding, and start to get on board and try to get the year to unchanged. And what happened last time was massive rally. Volatility after the event date got totally annihilated. Treasury sold off. Guess what level the FXE was? That's the euro 2 years ago.
I will say much higher.
Much higher is right. The one we were looking at the 134 strike to buy puts.
Wow.
Ouch, Chihuahua, right? Amazing what happened. That was, how right were they? Pretty darn right. So, all those forces, the TLT was in about the same place, not too much different, surprisingly. A little bit higher. But for the most part, and we had the S&P 500 was like 1750, right around there, rallied into the mid 1800s. They crushed the euro, and Treasury sold off a little bit. They crushed gold. I was looking at the strikes that we were looking at the time. Let me grab my data one more time. What were we looking at the time? We were looking at gold strikes in the 120s. Funny enough, the Chinese market is in a relatively the same place. Goldman Sachs, relatively the same place. Goldman's about 10 handles higher. Again, we were looking at the 178s and the SPY. We were buying that straddle. VXX was a much higher unit there, right around 47. So, quite a smorgasbord of activity with very similar circumstances. Instead of the taper, we're going to raise rates. So that's kind of the setup we had last time, and I'm wondering if I'm kind of have a small bet on the same idea if we're going to get sort of the same activity or same result again. So it's entirely possible. Entirely possible.
So you're saying that certainty is what will drive the market higher?
I believe so. Yes.
Got it.
That is my belief. If they come out and say, "Well, we don't know what we're going to do," they're going to look like a bunch of ninnies, and we are going to sell off.
So you're saying that if they punt yet again, based on data dependency or whatever terms that they're using at the time, you think that we're going to have a sell-off. Now, I'm in the same camp. I agree. Now, here's what I'm thinking going into the announcement. If we raise rates, I think we will rally, but I don't see that much of a rally in the S&P. I think we'll rally for sure, but I think that the downside risk that we have going into this, in case they don't raise rates, I think is far greater. Meaning, let's say if we rally, we're going to rally 1%, 3%, or whatever. But if the Fed punts, then I could see a 6 to 8% sell-off. Would you agree?
Yeah, somewhere south of 2,000 in the SPX for sure. Just like, because it's like I said, they're goofballville. They're not they're not using their heads, or they spend so much time talking about it, not enough time doing anything. I think, as far as I've known, stocks don't like that. They don't like waffling by the mandarins. They just like, they like it called as they see it. So I agree with you on that, Mike. So we'll see. Both of us agree on something very dangerous.
It is.
Very, only in the Fed block could something like this happen.
There you go.
Something so monumental.
Now, let me ask you this. So I think they will raise the rates. I hate to say I have faith in them because I don't like to mix the words faith and government for a huge variety of reasons. Many go beyond the scope of this show, but especially faith in the Fed really don't go together. But I do think they are going to do the right thing and raise. But with that, do you believe that they're actually going to go through with this and do it after 8 years of leading us on? And do you think they'll finally pop the question, so to speak?
I think they're finally going to pop the question. I honestly, I honestly do. I think they're gonna do it. They're gonna do it. They are going to get it done, so to speak.
Yeah.
They're gonna get it done.
Now here's the other one, though. Do you think they'll actually go a quarter point, or are they just going to say we're going to raise it a tenth of a point or something weird like that, just to say that they did it?
Yeah, I think a quarter point is, and that's not very much, and that's enough to get the ball rolling. Because it's so much more net than everybody else is, is trading their, it's so much more than every other G7 country is directionalized with rates, since everybody's lowering and negative, savings, all this other kind of nonsense. So I think this is the gunshot of central banks getting out of the printing press, at least short term. But
yeah, long term they're never going to give it up. But yeah, I would agree.
But short term, I think they got to start doing something, because unemployment's relatively, it's definitely lower. The economy's growing. I mean, really, you got to have 0% interest rates for that. So,
yeah. Well, it'll be interesting to say the least.
I agree.
Well, ladies and gentlemen, that concludes the first and possibly last ever Fed block on the option block. Moving onward, let's go to Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
And welcome to Around the Block, everybody. This is the section of the show to where we talk about what we're going to be looking at in the coming days. And with that, aside from the Fed, is there anything else that you could be looking at?
The only thing really, oil, that strange, the strange confluence that you saw, that's definitely something I'm still looking at. I think can't quite decide if being short oil and being short puts again in some of the major oil producers is a decent trade. I think it might be, but looking at combinations on that, still don't look too bad. Also, there was some pretty good takeover speculation in Twitter today. We'll see if I do have a little position in that. We'll see if anything comes of it. Mostly it's been just an annoying position. Selling puts that make no money because the stock keeps going down. And so we'll see what happens. We'll see what happens in that one. And then, volatility watch, always interested to see how the futures react, and kind of gaming where settlement's going to be for VIX. Right now, it doesn't look like they're going to crack the VIX cash too much before the Fed, which means we could have a relatively high settle for VIX this time. So those are my big watchies. Those are the things we're watching.
Very good, very good. And moving onward, in case anyone needs help navigating themselves through these turbulent waters of Fed announcements, political ups and downs, and market up and downs, feel free to contact me, Mike Tusaw, MTOSAW@RCMFS.com, or give me a call at 312-212-3531. Happy to discuss any of these matters with you and how it may or may not affect your financial portfolio. And Andrew, if someone is looking for some type of help from the option pit, where can they go to find out something that's the cost of an eighth on a 10 lot or something like that?
Education for us, an eighth on a 10 lot any month. Again, all of our stuff is money back guaranteed. So if you use any of our products, you don't like them, we'll just give your money back and tell you to never come back to Option Pit again. No, we don't actually say that, but you can go to our store, OptionPit / and you can see our store, all the goodies you can buy. Also, our mentoring services are there on the page as well. And if you want to learn some about trading options, come to us and we'll be happy to help you.
Very good. Well, ladies and gentlemen, that concludes this week's Thursday edition of the Option Block. Special thanks to my co-host, Andrew, and special umbrage claimed on Mark Sebastian and Mark Longo for not being here today, being at their Alliance. No, just kidding. They're doing a good thing, folks. But special thanks to them as well for letting us hold down the hot seat. It's always a joy, and we will see you next week. So long, everybody.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.